Hello, good evening to our Q&A session on DeFiChain. And I'm very happy that today Kügi will support me in answering your questions you raised before on Mentimeter, and we try our best, but I think we will not beat the last session from last year where we had 60 questions from you, from the community side. Today we only have 50. So Kügi, the record is still on the side of Mark and me. But it's bear market, and I think it's okay that the one or other is not raising questions today. How are you? Are you ready?
I'm fine. I'm ready. I just speak slower than it's my fault. So it's not you. It's me against Mark, and Mark can win. That's okay.
So we are a little bit stretching the answers, and then we need a little bit more, 1 hour to answer all the questions. Okay, then I propose we start into the questions, and we'll have a look what the community asks us. First questions. On the top place, number 1 with 23 upvotes. Any estimation about reaching sustainable DUSD peg based on data from about a month after buy and burn bot activation? Thanks, Hansan. Kügi, you are prepared, I understood.
Yeah, perfectly. The nice thing is, I think there are 2 other questions like that, so we can answer all of them together, so we get a head start. That's great. So the short answer to this estimation, I think, is no, because it strongly depends on the market. If we see a strong market up, everything will be solved within a few months. If we see a strong market down, it will take longer. In general, so it's really, we are still depending on the market. Once the situation is solved, we will no longer depend on the market for the peg, but right now, to get out of this situation, we need the market, or we depend a bit on the market, or the timing depends on the market, say it this way. What we see and what we know, and I think that helps a bit to get a feeling for the whole situation, is once we reach a premium in the DUSD, the DEX fee will go down 0.5% each day. So it will take at least 2 months to get the DEX fee below 1%. So you have to expect about 2 to 3 months, because it likely won't go down every day, 2 to 3 months after we reach a premium in the DUSD. So after we get into the situation where we have a premium, it will take another 2 to 3 months to get to 1% or below 1% DEX fee at least. So it's not within weeks that the whole thing is gone after that. And the other thing regarding the burn bot, we saw how strong it worked when it had double the amount, and now we have around 24 DFI per block that the whole bot gets, which is about 71,000 DFI per day. And that moves the DFI DUSD pool, so the DUSD price on that pool, by around 0.8% per day. So there you also get a bit of a feeling how strong this moves and what this can do over time. And I think there is already a proposal, or there's a discussion to give even more of the liquidity mining rewards to the bot, and also reduce the liquidity rewards on the DUSD-DFI pool. Because if you reduce the liquidity there, the bot is more effective. And also if the price increases, it's more effective. So that's, again, if the market goes up, if DFI price goes up, it's more effective, it gets faster, everything is fast, and the timing is faster. But maybe that gives a bit of a estimation or a feeling for the stuff. Yeah.
Thanks, great answer. I would add something. Many people focus on this peg, reaching $1, but for me there are several steps. First is reaching this $1, then we need a kind of premium that we see more selling, and also a decreasing of the DEX fee, and the final state is a reduced fee. Everyone has left the DUSD system who wants to leave, so we saw these DUSD sellers, we see DUSD shorts, minted DUSD sold against DFI or stablecoins, and then we have this stable system because they have to buy back the DUSD later on, and we can work with the interest rate to stabilize the DUSD. So it's not only reaching this $1 once, there are some other steps afterward. Good. Then let me check. Next question. Could DUSD be rated as a security by the SEC comparison to BUSD? Great question. I would like to start or try to answer it. The problem for the SEC is that in case of DUSD, there is no central entity they can get. In case of the BUSD, it's the Binance US dollar. They have this central company. They can get them and force them to remove this stablecoin pool. It's also backed, or should be backed, one by one with the dollar in the background. Our DUSD is working in a different way. It's backed by cryptos. It's not stable for a dollar. It's decentralized, so it's backed by every community member or partly backed, and you cannot force anyone to stop minting DUSD. So I think they will not rate it as a security. Maybe as a first step, they should have a look on Maker. Maker.DAI, it's a very similar thing, and it's more centralized than our DUSD. So I think not.
I mean, in the current situation, no one expected it to rate BUSD as a security, so I don't know what the SEC is going to do. So could they? Yes. Is it likely? No. And if they do, as you said, what would happen? And they can say it's a security, but the DUSD itself can't be stopped and can't be shut down or whatever because it's not emitted or something by a central company or someone. Yeah.
Yeah. Okay. Oh, sorry. No, I skipped one. That was not correct. Okay. Then one question after that one I skipped here. We often see 3 to 5 minutes, no blocks, and then 5 blocks in a row. Why is it so difficult to get constant block times?
I think that got answered in your tech talk with Yusin, or was it? I think Yusin said it in some interview somewhere. I mean, basically, it's about the consensus that we have, the type of consensus, because we have the Nakamoto consensus, where the block, the definition or the decision who can mint the block is probability. It's random, and randomness means sometimes it gets faster, sometimes it's slower, and over the average, over time, it averages out. And that makes it more decentralized, more you don't need any consensus or some coordination on the chain who is allowed to mint the next block, because you can do it with the randomness. But it has the negative effect that we have such changes or such fluctuation that sometimes a block takes longer and then we have more in a row. But this should get better when we reduce the block time for the DMC. I think they're planning to reduce it, the average block time, so the target block time, to 10 seconds. And then it's not going up to 3 to 5 minutes, but reduced to between 10 seconds and 1 minute, maybe, or something. But those fluctuations will always be there in some way because of the Nakamoto consensus.
Mm-hmm. Good. Oh, I don't want to click it twice. Okay. Will the LightWallet support DeFi MetaChain? I'm not a developer of the LightWallet, but I think so, because that's our...
I think they said that they want to support it. So I think so, but we will see once they bring it out.
Yeah, and the question is, which project is building on DeFi MetaChain and what are you using here? If kind of service is implemented and they have their own website, like a MetaMask wallet or something like that, then for sure it's not in the LightWallet, but the main features, I think, are also supported by the LightWallet.
Yeah, I guess the main connection will more likely be the Jelly wallet, like MetaMask, or directly MetaMask, because as far as I understand, MetaMask should be DMC, or it should be compatible. So it's likely that MetaMask is the way to go.
Mm-hmm. Okay. Is it theoretically possible to reach a buy the DUSD pack immediately? Maybe we can raise funds and pay interest interests for it from future block rewards, instead slow via burn bot like now? Thanks, Jimmy. Your answer?
Yes. Yeah, yes, it's possible. I mean, I even have numbers for that. So if you look at the pools, if you look at the three pools, because we have basically three DUSD prices. We have the DUSD USDD pool price with the USDC, and we have the via the DFI route, the price. And if you want to move all those three pools to the peg, means you just buy enough DUSD on all three pools. You would need 900,000 USDD, around 900,000 USDC, and around 2 million DFI. If you take that now and make a swap on each of those pools, you are instantly at the peg for all three pools. So would be around, 2 million DFI are roughly $1.2 million and 1.8 from the other. So roughly if you take $3 million now, put it on the chain, swap it, change it in the, not change it, already put USDD, USDC and DFI in the, because otherwise you move everything, and swap it, you have a peg on all prices, on all pools. The question is what happens afterwards. As you said before, it's not about reaching the peg once. I think if we do that now and move, if anyone takes 3 million and move that, all those three to peg, there will be a lot of selling in that. We also lose the benefit that we have right now, because right now we have the cheap route to get in at a discount with the stable pools and get out via the DFI price at a higher price. So the DEX fee is not that affecting the user, because they get in as a cheap price and out at a higher price. If you move all of them up to the back, you lose that benefit basically. And you suddenly, because shocks to the systems are always bad. So if we do that now, you suddenly have a shock to the system. It's a peg. A lot of people suddenly start selling. It goes down to 80 cents again. The stablecoin pools would basically stay stable, I guess. But yeah, it's not that much if you think about it. So it's only $3 million. But the question is what happens afterwards. And so in my opinion, it's far better to have a stable, smooth transition up and see, as we saw it before, we saw it in beginning of February. It went up. We saw after some time, first sellers come in, and then it starts moving up slowly again and not up and everyone dumps the USD or something.
So the speed is a feature, not a bug, of this slowly burn, that the DUSD dollars are not coming at once and crashing the price again like mid of last year. Correct.
But if someone wants and raises 3 million and does it, fine. But I don't think we should do it with community funds, because it's the risk to have shocks and then negative effects are a bit too big.
Okay. Then, is dBTC-DFI liquidity pool farming still a good investment? At which percentage increase of DFI compared to BTC are you making a loss?
I think the question is about the impermanent loss, right?
I think so, because you're not making really a loss if the DFI prices increases against BTC. You're making less profit than just holding them. That's the impermanent loss. And if it's a good investment or not depends on your investment thesis.
It depends on how the prices move. If DFI increases by 1,000% in 3 days, your impermanent loss is bigger than the rewards that you get in that time. Is it likely? So it depends on what you expect. That's always, if you expect the DFI price to pump 100% against BTC in the next month, it's likely better to get out of the pool, because then you expect a high impermanent loss. If you think it will increase 100% over the next year, it likely is better to stay in, because then your rewards are likely bigger than the impermanent loss. So I think it's always a bit, what do you expect from the market?
Great. Next one, when do you expect to have the peg? I think the question is answered already. What do I need to know, learn to start coding, working on a dapp for DeFi meta chain? learn
the same
EVM?
as you need for Ethereum, exactly. It should be 100% Ethereum EVM compatible, so it's Solidity. There are a lot of great tutorials, I think Crypto Zombies or something, where you really can learn Solidity from the ground up. And yeah, that's the best working start point.
Good. How might bots work to arbitrage DUSD once dynamic interest is activated?
There is a conflict of interest here. I should not tell you that. No. Generally, how to arbitrage. I mean, that's not only how bots arbitrage it, how anyone will arbitrage it, and that's how we want to have it. As soon as you have a premium in the DUSD, it's beneficial for you to mint DUSD and sell it for more USDD or USDC. So to do a stablecoin swap. And if you get even a negative interest on this loan that you took, then you earn for waiting for the premium to go down. So you take a lot of minted DUSD positions. So you're short selling DUSD. And once the premium is down, you buy back, wait for a small discount or at the peg, buy back and therefore stabilize the peg with this buy and sell. So that's how to arbitrage it, the premium. So the premium gets a direct arbitrage kind of, or say it this way, the dynamic interest rates incentivize an arbitrage that you do it. The other way around, in the discount, the dynamic interest doesn't incentivize an arbitrage, because you don't get an incentive for buying DUSD with USDD if you don't have a loan. So it's only closing the arbitrage if you have a position. But the dynamic interest in the discount is if you have a lot of open DUSD loans, you incentivize people to buy DUSD to pay back the loan because it's expensive for them to hold the loan open. And arbitrageurs would probably use that to say, okay, if there's a strong discount, I expect a lot of people to come in and buy back the DUSD if this stays for a longer time. So I buy it, wait for it to go up, and then sell it again.
Correct. I think we should explain it more and more if we reach the premium, because it's essential that a lot of people open such a position. Everyone open arbitrage position in a premium case will use a discount case or scenario to close this arbitrage and helps to remove the discount again. So the way is we have to reach a premium. A lot of people selling DUSD minted ones against stable coins, maybe half of them putting into liquidity mining, waiting, and if we are going below $1 again, these people will close their arbitrage position by buying back again the DUSD and removing the discount. And that's the stabilizing effect via the interest rates. Negative interests will incentive to mint DUSD and sell them, and positive high interest rates will force them to buy back and close their loans. That's how it works.
Exactly.
Good. Is it actually ensured that the DUSD will hold the bag as soon as it is reached? In other words, does the DUSD actually work as an algo stable coin, and is there any evidence of this? Thanks, Jimmy. I think we partly answered these questions right before.
I mean, the part with hold the bag as soon as it reached as dynamic interest rates, as we already explained. I think the only thing that we didn't answer here is the part of the evidence. And in my opinion, the thing is, the DUSD is the first and only stable coin with a full dToken system behind it, where we have this whole liquidity demand for the whole system behind it. So that's kind of new. And there it needs to prove itself. We saw that it goes into a strong premium if you try to have it 100% backed. We see that it's in a discount if it's not 30% backed, but only 10% backed. So that's not the solution either. But our target of below 30% algo ratio, from what we know now, it should work and it sounds good. But proof and evidence is there once we have the peg and we have it stable over bulls and bear markets.
Great. Do you already know about projects which are worked on for DeFi Meta chain?
Yes, I mean, wich is for the Meta chain. That's definitely.
Yeah.
I'm working on projects for the Meta chain because I want to put stuff on the Meta chain once it's there. So I know that there are projects. I mean, I think the Berkeley Research is working on a lot of stuff, but they are not telling us all about the stuff. But yeah, there are stuff that's already in progress. Yeah.
So I have no concrete project except the options trading, but I hear a lot of people working on it. Berkeley Research, EU, and some of the other community members want to use DeFi Meta chain. Also, our NFT marketplace will short or soon launch on Ethereum and then transfer it to DeFi Meta chain. So there will be projects, but I have no concrete one here to be mentioned. Okay, what role will DeFiChain play in the future of the overall decentralized finance ecosystem? Kügi.
It will be the centerpiece of everything and the one-stop marketplace where everything comes together and everyone uses it because we are the one and only best, greatest DeFi platform ever. Right?
Correct. Nothing to add.
Yeah, no, I mean, I think the thing is, we have the potential to be that with EVM compatibility and the UTXO level and everything, and the native DeFi and the dToken system and everything with the DUSD working. We have the potential to be really the centerpiece of a decentralized finance ecosystem. I don't think we will be the only protocol or platform with DeFi. I mean, that's clear, but we likely will be a major player in that ecosystem.
That would be my wording. We are playing a major role in the DeFi ecosystem because of this UTXO blockchain and the EVM layer on top of it. And when I see what we built up in the last 2 years and kind of extrapolate it, we will be really big with DeFi Meta chain. A lot of things are coming and playing a role in the DeFi world. Okay, what would be your top 3 dApps on DeFi Meta chain? Honestly speaking, no idea, because people are more creative than I am, and I have no idea what they are building. There will be the one or other really cool thing, pretty sure. I'm personally waiting for the options trading rights, because this will add additional utility use cases to the dToken system. Will be one thing everyone can use, also with a small amount of money. Options trading on classical stock markets, you need a kind of ground capital to work. And here with the dTokens, you can play around on your own in a very easy way. So here I'm looking forward to it, but pretty sure there are other big projects in the pipeline. I have no idea which one.
Yeah, I mean, in my opinion, for me, DeFiChain is so about DeFi. I mean, we are EVM compatible and have everything. So likely there will be dapps from the Ethereum system coming over with NFTs and everything. But my focus would be on the DeFi part, where we are able to have decentralized hedge funds and decentralized portfolio managers that allow you to, as you said, with a few dollars, get into a decentralized system, some hedge fund manager being able to do that fully decentralized with the dTokens that we have, trading systems and everything, and the full automation that we allow what others can't, because we on DeFiChain have the automation and Ethereum doesn't, for vault automation and stuff like that, where you then automate the strategies, your yield strategies, completely autonomous and working on that, and not need any interaction.
Another question for you, Kügi. What is your opinion about looped DUSD vaults? The last ones.
The idea of looped vaults, or why I think they were good, is that they take a lot of liquidity or circulating DUSD out of the system. So they reduce the circulating amount of DUSD, and that's what we need right now. The best thing is to get DUSD completely, the algo DUSD completely out of the system. Second best thing is to get it out of the circulating supply and have it kind of locked up. And if we would have managed to get 100 million DUSD out of the system locked up in the liquidity, in the loop DUSD vaults, we would have solved the whole thing because if they stay in there, it's perfectly fine. So I don't think they're bad. I think of course, it's better if we increase the demand for DFI and DFI price goes up. But loop DUSD vaults still take out DUSD from the system, and that's what we need right now.
Mm-hmm. What is your highlight of the roadmap 2023? I think DeFi MetaChain is the major thing. Everyone is waiting for it. Other opinion?
No, DMC. Definitely.
And it's planned for Q1, so it's beginning of the year, so we don't have to wait till Christmas.
Okay, say it this way, all the things that are planned for the DMC, because first step of the DMC, I mean, okay, maybe I get more specific, because the first step of the DMC is just a normal EVM compatibility without the automation. And then they plan to add the connection to the DeFiChain ecosystem, that we have the connection to the vaults and to the dTokens and everything, and the automation, and that you can do automated smart contracts and not need to trigger them. And maybe that's my highlight, to say you have the possibility of, for example, vault-maxi, be able, bots like that, monitoring bots, run on the DMC natively and no need for any additional server or something. Because maybe I think I know which question you skipped. Because there was a question about running vault-maxi on the LightWallet directly and integrated somehow.
I try to get it. Maybe they are listed at the end.
But that's the answer to that, because that's what's possibly currently not possible, to have something that needs constant action.
This one was the skip ones. I think
exactly.
This was okay. Question was: it is possible to integrate kind of vault-maxi solution into the LightWallet, or even in the mainnet integrate like the kind of vault scheme with options to avoid liquidation? Why yes or not? Thanks, Hansa.
Exactly. The thing is, you need something that monitors the vault 24/7. And the LightWallet, you don't have the LightWallet open 24/7. You don't have internet 24/7 on your phone or whatever. So you can't have something that needs to monitor the chain 24/7 somewhere except on a server that runs 24/7. So that's why it's not possible to integrate that in the LightWallet or something. Once we have MetaChain with the automation, where you say, okay, I deploy a smart contract to the MetaChain and define that this smart contract is triggered every 10 blocks, for example. I don't know how they will do it, but roughly something like that. Where you say, okay, every 15 blocks, it's triggered. I pay the fee in advance for that, and then it triggers automatically on the chain. You don't need any external server, anything. Then you can deploy the smart contract via the LightWallet and say, okay, I want to use that for that vault. I fund the stuff that I get the transactions, and then it runs and runs and runs on the chain. And as long as the chain runs, you don't have any risk or any problem.
Okay, great. Then I remembered how I get answered questions. They are at the end. Now we go back. What is the challenge when adjusting the block time on DeFiChain for DeFi MetaChain? So I think that's related to the last tech talk where you mentioned we want to reduce the block time from 30 seconds to 10 seconds. Challenge, I think, more computational power for the nodes. Yeah, they have to.
I don't even know if it's more computational power, because in the end you do the same computations, because you process the same transactions, the same amount of transactions. I mean, if more transactions come in, you have more computational power, of course. But I think the block time itself is not so much about the computational stuff. There are two things regarding block time. The first thing is that on the chain you don't have time, you have only blocks. So a lot of stuff on the chain depends on average block time. when you say the interest calculation, the reward calculation and all that stuff depends on an expected block time. And this in the code, you need to make sure that all those calculations really adapt correctly to a block time, how the rewards are reduced and all that stuff. So you need a lot of things to be checked that they really work as you expect them to if you now change the block time or the average expected block time. And the other thing are network effects. Because if you find a new block, you need to distribute that block over the network. And if it takes 2 seconds, for example, for a block to reach everyone in the network, I mean, in reality, it sometimes takes 5 to 7 seconds for the block to reach everyone in the network. Depends on how connected you are with the network and how far away you are from the miner who found the block. So that also leads to some problems sometimes. So you can't go too small or too slow or too fast with the block time, because then the miner finds the block and I don't even see the block before another miner finds the next and another finds the next. So me as a miner, I'm working on an old chain if I'm not connected to the right blocks. So that's also something to be considered on how far to reduce it and or what to do with it.
Okay, great. Then next one. What is your opinion to stop TickerCouncil tasks and use on-chain voting at DeFiChain instead? Pros and cons.
I mean, that's Julian started that discussion publicly, I think. Yeah, I mean, do you want to answer it, or?
I can.
I mean, we're both in a TickerCouncil, so we can both say it from the same.
Okay, Julian started the discussion, and it's currently also running in the background. The TickerCouncil should not make decisions like in the past. Now we have the on-chain voting, and the original purpose was to add ticker to our system. So at least we should go back to this stage where the TickerCouncil also only is responsible for new ticker proposals, and also there we are discussing, or someone has ideas, how can we make it more decentralized? It's not really a council needed to select tickers. If there's anyone out there helping, you can contact us. We are open to remove the TickerCouncil if it's not needed, because it was an interim solution, and we should think the next step and remove it.
Yeah, same here. I think the original purpose of the TickerCouncil is still needed to find a way to define tickers, but there also might be. So I think there is the need for someone to take care of doing the voting for new tickers and everything, and find a way to get that decentralized. This can be improved, but there is the need for someone to do that. I think the main thing here is that the TickerCouncil now, with all the emergency powers, let's call it that way, that were necessary last year, the TickerCouncil has a new meaning than it had before right now. And I think this new meaning, it's time to remove that and stop that, and because we have on-chain governance now, and we can use that, and we don't need this TickerCouncil stuff.
Yeah. Okay, and next one. In comparison to 1 year ago, the LightWallet often feels way too laggy regarding the response time of my inputs. Is this a common issue? I'm also facing these things. Sometimes it feels like I tapped on the screen, but nothing is working. I have no idea why it's behaving in this way. It depends also on your phone, to my knowledge. And yeah, it's an issue, and I think the developers are working on it permanently and try to optimize it. But a lot of things are also added since last year. Just remember, we didn't have the vaults at the beginning, right? Or no, the vaults were there, the future swaps were not integrated. The DFI payback, and a lot of things are added more and more. And I think now they have to focus on a kind of optimization also. and have a look how it could work.
I think it's for a lot of stuff. There are computations in the background that are needed for signing the stuff and so on. And I have an old phone. I'm used to it being slow, so I don't feel it that way because everything is slow. But yeah, I think it's a topic that the devs are working on constantly to improve the performance.
Maybe we can raise our telephone joker, Andreas here. He mentioned in the chat the UI is blocking the main thread, and that's the issue of the performance. Okay. Then how will might option future trading at DeFi Meta chain work? For the option trading, there was a tech talk last year, I don't know, August, September, October, roundabout, about the rights protocol. Have a look there. On birthday research, on the blog of them, there are 2 articles about. You can read about the fundamentals about this protocol and how it really works. Then we have to look. I think it's very similar to the dToken system. You have the theory in advance, and then if it is live, you have to check how it really works. So that's my experience. I have to try out and I have to play with it. It's not like a classical option trading. What I have learned is a little bit different. It's like a comparison to a DEX usage to an order book. It's also behaving different and working in a little bit different way. And the options trading is similar. It's not like the classical way. It's more a DEX style, but we have to check. And the futures, I don't know if there is any idea currently how this should work. It's kind of leverage trading then. We have to wait, I would say. Anything you can add?
No. Same what you said. The options, whites, and then let's see.
Kügi, my favorite question for you. How many for-profit bots are you running? How much are you making a year? Are you a DFI millionaire?
Can you click next?
Sure, I can also click.
No, I mean, yes, I'm running some bots, but not much. And no, I'm far away from being a DeFi millionaire. It's crazy because people think I have a lot of DFI and money and whatever, but no, unfortunately not. Also, I see a lot of bots running because if you do the bots, you see behavior or I see patterns of bots. And I see a lot of bots with a lot of money running there, and they destroy my profits, and I hate them. But I mean, it's good that they're there because they make the whole thing efficient. But yeah, it's less than you think. I mean, you can make double-digit % profits in a year with arbitrage bots. But it depends on the size. So in my size, in a low size, you get more volume through. You get your volume through. As soon as you play with big money, it's not that crazy that you get crazy returns. So don't think that bot people are super rich. It's just nerds.
Okay. Good. Is it possible to determine the amount of frozen DUSD-DFI liquidity mining assets on Cake? And could this potentially be the reason why the amount of tokens in the pool is not decreasing further? I think you had a look on the numbers.
Short answer, no. DUSD will make shorts again of my answers because I always give the short answers. No, the thing is, only Cake knows how many DUSD-DFI tokens are frozen, but they tell us on the side how much liquidity they have in the pool. So we know that it's 9 million, I think it's $9 million liquidity is from Cake in the pool. And the whole pool has 24 million. So at top, the 9 million, even if all of current Cake's liquidity is frozen, it's only 9 million in the pool, and the rest of the remaining 15 million is definitely not frozen because it's not on cake. So.
Yeah, so it's not a reason. There should be some
likely are frozen in the pool and want to get out, but the majority is not.
Okay, what do you think about Tommy's thread about why there will be a negative effect of the dfip on the long run? Discussion with Kügi.
I'm biased, so you answered it.
So I think this is the bet, or I'm right here?
Or I don't know if this is the bet or because there were discussions about the dfip and the negative effects before that. So the thing is, Tommy's opinion is...
the last dfip regarding the negative interest rate emission.
I think it's about the special dfip, yeah.
Okay.
So Tommy's opinion is that that we need to burn all the algo DUSD or nearly all the algo DUSD to get back to a stable system, and therefore only burning helps, and negative interest won't support anything because it doesn't burn enough, and that's his opinion, and therefore he thinks that negative interest is bad. That's his opinion. I think that we should raise the DFI value and or the price and get back to the value and get the balance back again. Yeah, he thinks we need to burn everything. I think we should focus on the price and value and get the usage of the system up. And in my opinion, negative interest is not so much an economic tool, but more a marketing incentive. It should be seen as a marketing measure, in my opinion. To create more usage of the whole system, because we need more usage of the system. And if you see it as an economic measurement in a working stable system, it's bad. It's not something that you need in a working economic system. And it was never designed like that. It's designed to get the system, the usage in the system back up to a level where we need it. And yeah, if you see it like that, it makes perfect sense. If you don't see it like that and see the value not there right now and need to burn everything, then it doesn't make sense. So I understand his view. It's just completely different to my view.
And I think there's no clear way, where say that's the right one or the other one is the correct one. So it's very hard to say which is better, because every path has its own advantages and disadvantages. Currently, I think the negative interest helped to raise the DeFi price a little bit. It's not this factor 2, honestly speaking. But on the other side, if we have a look how many DeFi are now in the vaults, for sure some reallocation between masternodes and the vaults were done in the past, but also some additional were now locked. And if we remove the negative interest rate, part will be open and released. And then what will be done with it? Are they then selling, or what will they do with it? Hard to say.
Yeah, in my opinion,
what is the better way?
So from the marketing incentive perspective, we definitely reached all our goals, because the vault usage is up like crazy. The DVL, the DFI locked in vaults is increasing daily. The loans amount is increasing and everything. So this all is up. The DFI price is not up as much as we expected or would have liked. But if you compare it to the constant decreasing against Bitcoin before that, we saw a constant straight line down.
Correct.
And now we are far away from that. I think we are 20 or 25% above that. It's not 100% what would have been great, but we saw a definite turn in the trend against the overall market. So that's also a plus. And yeah, the usage is up like a lot. Yeah.
Okay. Then why does Julian want to bring the dToken to the DeFi meta chain? It's more or less clear. Why not? It's clear for me. If you want to have the options trading on DeFi meta chain, you want to trade also dTokens, and for this we have to bring them to the DeFi meta chain. What is not really clear to me, what does he mean with this bring to DeFi meta chain? Is it like just bringing out from the layer, from the base layer to this DeFi meta chain level 2 layer, or is it also meant to have liquidity mining then on DeFi meta chain? I think not. I think it's just that the dTokens can be transferred, and if they are on the DeFi meta chain, you can build up new use cases, new services, bots, automation, whatever you can think about very easily without updating the node software. That's the advantage of DeFi meta chain, building things instantly on the blockchain.
I think the thing that makes sense is to make it accessible. That's the thing.
Is it planned to interact with Bitcoin or Lightning? I think it's planned. It was also mentioned, but I don't know if anyone is currently working on it. Maybe it's just an idea, like currently the DeFi meta chain, and later on something is implemented to interact and work with it. I think it's more an idea currently, but yeah, idea is there. Your take on further privacy features for DeFi meta chain, for example, bridge, atomic swap to Monero or Mixer on DeFi meta chain. Do you have an opinion there?
No. I mean, yes, have more tokens on meta chain, more connections. It's good.
I also no opinion there. Privacy coins are also a little bit critical regarding regulations and how they treat it also on exchanges. But if there is now a bridge from DeFi meta chain to Monero, why not? We need someone who built it, I think.
Exactly. Okay. I think it's not a problem if it's just one of many bridges.
Yeah. Is dBTC a security? Seems like it would pass the Howey test since it is emitted from a central company. What is your opinion? I'm not an expert of a security. I'm not a lawyer. I think not. It's a wrapped coin. Means someone is holding. Currently, Cake is holding the asset, and then mint the dBTC on DeFi meta chain. And now with our bridge Quantum, it's going a new step to a decentralized way. Yeah, that also others can mint tokens and hold the asset on the native blockchain, and then I don't know if it's really a security, and yeah, that's my opinion, but I'm not here the expert of securities, especially if you want to back a crypto on another blockchain. Yeah, it's not this I'm holding a stock and mint a token which is purely equivalent to the stock. Yeah, then we are running into issues because stocks are regulated. Bitcoin, it's a little bit away.
I think it's with the Howey test, it's also, I mean, not a lawyer and anything. On the one hand, Cake is not emitting the dBTC, it's wrapping BTC. And on the other hand, the value of dBTC is in no way connected to Cake, right? So.
Yeah. Okay, good. Next one. In the pink paper, it's mentioned that there will be options on DeFi chain. So right now we are using the DeFi per block for something different. How will that change again? And options will be live. We mentioned before options, the RISE protocol will be implemented on the DeFi meta chain. And to my understanding, it's not there are no incentives of block rewards to it. It's commission based. So there will be options, buyers and sellers, and the one will pay the others. And if we go this way, I think it's also the right way, because this is this real yield. Yeah, it's not inflation based. It's a strong use case where the usage will generate the yield.
Yes.
Good. How many dTokens except DUSD are unpegged? Is it a problem? If yes, how could it be solved? Kügi?
I mean, all the dTokens except for the DUSD have the future swap and are by design not at 100% pegged. the peg of the dTokens is in a range of plus minus 5%, exactly to be less risky of being a security and everything. So it's all the dTokens are there's a difference between the DUSD and all the other dTokens, say it this way. And they are in the range of plus minus 5%. I mean, right now, some of them are in a bit more of a premium because there's a constant buy pressure from Cake, because they buy a lot of dTokens right now. But the future swaps are always getting them back to the range. And once this buy pressure is gone, they will go back into the range. Yeah. How many dTokens except USD are unpegged? Basically none, because they are by definition loosely pegged and fluctuate in a range of plus minus 7% maybe, because it's by definition that they're not hardly pegged to 5%. They can go up and down.
It's the design of our dTokens, and it works pretty good to my perspective.
So is it a problem? No.
No. Okay, do you think it is a good idea to increase the DFI for the buy and burn bot by taking them from other liquidity pools? Yeah, I think that's a current running discussion on Telegram, on Twitter. If we should use some more DFI from other liquidity mining pools to make the bot stronger. What's your opinion?
In general, I mean, for me, the buy and burn bot is in a way, I mean, it always sounds bad, but it's in a way a debt cut. It's slow over time. The community pays for reducing the DUSD. And increasing it, we see that it works. We see how good the bot works and pushing the whole thing up. We saw that extremely strongly in February or in January when it was really strong buy. So we saw how it works, and it might make sense to increase that, because taking more from the dToken liquidity pools will increase the buy and burn. And also, if we reduce the liquidity in the DUSD-DFI pool further, it's also increasing the effect of the bot. So that can make sense. I think we need to be careful with the how much. So not to overdo it, as we said before, not to shock it and do something, but I think it's not that big anyway. So if we take 20, 30, 50% of the pools, it gets stronger, but not crazy strong. And would be a way to have a common solution for that, where everybody pays a bit to solve the problem, and we don't need any other strict measures.
Good, thanks. Do you think DeFiChain will make Bitcoin Maxis invest in DeFiChain? I think per definition not, because Bitcoin Maxis are only Bitcoin holders.
No, Fabio says he's a Bitcoin Maxi. So there are already Bitcoin Maxis who invest in DeFiChain, because Fabio says he's a Bitcoin Maxi and he invests in DeFiChain. So, but yes.
Yes, is it relevant? I think not.
I think maybe over time, Bitcoin Maxis, I don't like the word, but people who are mainly in Bitcoin right now will see the benefits of decentralized finance and all the possibilities you have there that you don't have on Bitcoin right now. And then they might also go into DeFiChain.
Great addition. If you are a normal Ethereum holder, why is the advantage in doing something, whatever, or in the DeFi meta chain? Why should I switch? I think it's independent if you are holding in Ethereum bag or not. The main question should be, why should I use DeFi meta chain and not Ethereum as the base blockchain?
I mean, there are two things. One is on the goal, where we say, okay, not step 1 of the meta chain, but step 2 or 3, I don't know, where we have the automation, because Ethereum doesn't have that. And we will have that. And we have the native dToken system, the DUSD, and therefore far more DeFi natively there, where everybody can build on it and don't have to reinvent it in the EVM. So I think that's amazing. And then this whole thing that we want to be the connection part the layer 0 is, I think, or 0.5, I don't know how they call it, to connect to all the others, where you then have a lot of native bridges and really consensus-based bridges that are safe to move between the chains, and therefore have an easy way to go from one chain to another over DeFiChain as the connecting part. So you want to be in the middle of it and not somewhere on the outskirts of it.
Okay. Always wondered how rewards get into my wallet. Is this a real transaction with outputs to every wallet? It's not a transaction like a Bitcoin transfer, so no UTXO transfer. It's this account model. How it really works in detail, I don't know. Do you have deeper insights?
In the end, it's the node increasing the number. Because that's the thing, the UTXO model is where you have transactions all the time if you move something. The account level, the account model that we have on top of it with the token system is that the node keeps track of the number of DFI that's in each of the accounts. So there is no UTXO send around and summed up. It's just the number in there in the database, so to speak. And the node ensures that it's the correct number. And the node says, okay, you earned that amount of rewards, so you have that amount of more rewards in your stuff. It sums up, or it knows how much rewards you got on each block. So if you look into the account history, you see each block that amount of rewards come in. So in that case, it's kind of an account level transaction because your account changed, but it's not the UTXO transaction, no.
Okay. Is the recent increase in the value of DUSD sustainable?
Yes.
Yes?
It's the same question as before. It depends on the market. I mean, sustainable. We increased the price of, it's always value versus price, but we increase the price and the bot increases the price continuously. The thing is, if the whole market reference drops, we are, even if we're above the reference, we drop. So if the whole reference goes up, we go up. So sustainable, as we said before, we need to go into the premium, get the loans correctly, get the amount of sold USD correctly, get the algo ratio in a healthy level, and then we are 100% sustainable. Until then, we are still, depending on the market fluctuations.
I would say we improved the situation a lot. The stablecoin pools are up, the DUSD-DFI pool is up, we burned more DUSD, we have more loan-backed DUSD, so the overall situation is better. Sustainable is maybe the wrong word because we have the relationship to the market.
Yeah.
When moon?
Soon.
Soon.
I don't know.
DeFi meta chain? Who knows? Depends also on the market.
It depends a lot also on the market, but yeah, it's let's see.
How can I short on DUSD? You put your cryptos into a vault, mint DUSD, and sell it against any other cryptos, DFI or stable coins, and bet on that you will buy back the DUSD cheaper in the future. That's the shorting part of DUSD, and there's nothing wrong in shorting DUSD. We need it, especially if we are in the premium case, because every open short position has to be closed later on and helps in the discount case.
And there's always the question, what do you sell it for? Because if you sell your DUSD for DFI, it's always a combination of short DUSD, long DFI in this case. If you sell it for USDD, you are short DUSD, long USDD. USDD might not go up, so you are only short DUSD. But if you sell it for Bitcoin, for example, you have a spread rate, DUSD versus Bitcoin.
Sounds like a new episode for Demystified.
The history of short selling is a history full of
Should we redesign the buy burn bot so that it doesn't burn, but buys and holds to protect the peg in both directions? Would it be possible to program this idea as a smart contract on DeFi meta chain?
So the easy answer first, the second one, so I wouldn't put that as a smart contract on meta chain because DUSD mechanisms are consensus level, and I would put it as a smart, if we do it, put it as smart contract on the consensus level. But we have smart contracts that they just need to be put into the code. The question if this makes sense it's something that we can discuss. I'm not sure if we should do it in an automated way, because in my opinion, the buy and burn bot is here because right now no one would take the trade that the buy and burn bot does. So it's part, like I said, it's we as a community together do the thing that's necessary because no individual wants to do it. No individual USD. So we as a community say, okay, we invest part of our rewards as a community to do that. And if you want to use such a fund or such a pack or such a pool of DUSD or of DFI to then swap it back automatically, I don't know if you want to do that automatically on chain, on the consensus, or have the people do it, because then we have the incentive. As I said, if we are in a premium, people mint USD, sell it for USDC, and then go back. So it's a distributed, a decentralized way of doing that, because everybody will have DFI or USDC or USDD, and when it comes into a discount, they sell it, swap it back to DUSD and close the loans and everything. So then it will be like that, and I think that's the more decentralized way than have it in the code and force it to happen. So it's better to have it, in the community.
Okay, thanks. So now we have 1 hour, Kügi, already.
Woo!
And we tried to make answering 50 questions. We have not managed it.
Yeah, I talked too much.
36 are answered. Should we now make it longer and try to do the rest also?
I don't know. I mean, it's only 3 upwards there. What's left in the question? We can try to go fast. I don't know. I have time. But...
Okay, we can do it faster. Okay, not so detailed, but that every question is part of the show. So let us do it in a quicker way. The DeFiChain is proud of having more than 12,000 masternodes, but decentralization is a farce because 3/4 of the masternode is controlled of Cake. They could manipulate the consents, couldn't they? Short question, they could manipulate, but then the rest of the world will fork them out. So we will have 2 DeFiChain, DeFiChain Classic and DeFiChain Cake. And if no one except Cake is using the fork, there will be no value, and then you can decide, okay, what it is worth to be at Cake. I think that will not happen in future.
Also, people on Cake might see that as a violation of trust and of the terms of service, sue them or whatever, and take the funds off. So why should they?
If these stocks go up in price, wouldn't that create a lot of algo DUSD? Is there a plan to counter that?
Not necessarily. It doesn't need to create algo DUSD. It only creates algo DUSD if the future swap is used up there. Right now, in the history, we see that the future swap is the best trader on DeFiChain ever because it buys at the bottom and sells on the top, because people overly buy on the top and overly sell on the bottom. So we have a premium on the top and a discount at the bottom. So that's the one thing. Only if it's used from the future swap. If the future swap is not used in that way, it won't create any algo DUSD. And if it's used that way, yes, we might increase algo DUSD a bit. We have the limit of the future swap in the future because the dfip is already approved, it's just not implemented. And we also keep in mind that we burn a lot of dTokens, especially since we are moving to a strongly backed system again. The interest rates burn. So we burn up to 5% of all the dTokens that are there, all the liquidity that we have over 1 year. So that is reducing the tokens anyway. So even if we create algo DUSD there, which I think we won't, because future swap right now is used in a different way, then we still burn the DUSD or the dTokens with the interest rates.
Good. Are there some news on the DUSD lock pools? No use, and I think currently it's more or less on hold. The developers are focusing on DeFi meta chain and not working on this lock pools. Short answer.
Yeah.
Will it be possible to make Bitcoin ordinals, I think, visible in the DeFi chain ecosystem at some point? You mentioned before we need this taproot update on DeFi chain if we want to use it on the base layer, but we will have DeFi meta chain, and we have this community project DSEA, DC, which will be an NFT marketplace, and I think we are more flexible on the DeFi meta chain. No usage on
that's
the
the
base layer.
ordinals are like a workaround to get NFTs onto Bitcoin. We won't have the need for a workaround. We have the original NFT Ethereum way. So why have a workaround to bring it in?
Yeah. Will it be possible to make
the
same? Was it twice? How much is DeFi chain tied to Bitcoin itself? So let's say Bitcoin would die, would DeFi chain go under as well? I think the whole crypto market will go down if Bitcoin dies.
I think we need to differentiate price-wise or technology-wise. Yeah. Regarding the price, the whole market is tied to Bitcoin. If Bitcoin goes to zero, the whole market has a problem, at least short-term. Technology-wise, if Bitcoin, if there is some flaw in the Bitcoin code, because DeFi chain builds on the Bitcoin code, if we find some problem in the Bitcoin code, it could be that also DeFi chain code has a problem because it's built on the same thing. But we are a separate project, so depending on what that problem would be, we might have a different solution, or we might not have the problem because we changed a lot since we forked from Bitcoin.
Okay, on KuCoin, there is since a few weeks the similar moving buy order arbitrage with the DEX is not possible anymore for me. Do you know why? Is this a bot?
Likely.
I have no idea. Very likely, yeah.
A moving buy order that's is killing your arbitrage is likely another bot that does arbitrage. That's how system gets efficient, because people do it more.
Who can set up new liquidity mining pools? Has someone something like a master key tool, for example, adjust fees if master nodes vote for that?
Yes, there are the foundation keys or foundation addresses. I think it's, or are they called foundation? I don't know. There are some addresses who can change the governance variables and attributes, and they can adapt that stuff where you define what pools are there, create new pools, define the burn fees on the pools, define the commissions and all that stuff. So there are some things, and right now with the on-chain governance, we can also add and remove addresses there, so it doesn't need a update, a hard fork to change those addresses anymore.
Okay. Cause DeFi price decrease an additional inflation because the amount of DeFi liquidity mining pools is rising? If yes, any estimation how many DeFis were added from $4 to 50 cents? It is fully reversible.
Okay. Yes. So I think what I understand from this question is that we added DFI, so we have inflation. More DFI means that they are sold, so that's basically selling the rewards, which is a pressure on the price. So yes, this likely also led to a bit of the price decrease, but I think the main price decrease that we had from 4 to 0.5 is the overall market crashing and leading to the DUSD back, leading to a bit of panic in the system, and that led there. But in general, yes, it's totally reversible. If enough people are convinced that DFI is worth $4, it will go to $4, and then people are convinced that it's worth more. So yes.
when will all the dfips finally be integrated? I think Kügi was building something, but it's still not live, and there might be other ones too. Maybe one remark on this: the dfip is not a must be implemented. Yeah, it's a voting on can be implemented. And then it depends who is implementing it, because the developers from Birthday Research cannot take care of all the dfips. Yeah, there is no must do for them.
I mean, as I said, a dfip is a vote of confidence. It's telling the developers we like that. And I mean, this one thing what I did is the lockpools, where I prepared stuff in the code, but I can't do everything. I can't change the ocean part and everything. And we agreed with the developers that it's more important to focus on DMC right now. There are other dfips who are also still waiting to be implemented, and who are planned to be implemented. The dynamic interest rate, for example, is not implemented yet. Also, the DEX fee is not implemented. The automated DEX fee is not implemented yet, but planned to be implemented. But they all are basically in the queue and will be focused on after DMC is done, because right now the focus, in my opinion, should be completely on getting DMC out and then do the other stuff that's planned.
Correct. Will Bitcoin later also be properly integrated as a layer like Ethereum blockchain?
Properly integrated like the Ethereum blockchain. I think it's meant that because we are now EVM compatible, and in that regard, we already have Bitcoin integrated, because we already have the UTXO model and the UTXO transaction model integrated. That's what we build on. So we already have that. I think something to clarify here, when we have the EVM compatibility, we don't have Ethereum on our blockchain. We have Ethereum compatibility that we can use all the smart contracts from there also on our side, and it's easier to bridge from DeFi meta chain to the Ethereum world. And with our UTXO model, it's easier to bridge from our model to Lightning or something, and that's planned, yeah.
I made the comparison or example with a kind of document. If you are using Microsoft Word, this is Ethereum, then we can also write documents in the Microsoft Word format, but it's a different location where the document is stored. So we need this bridge to transfer from the one to the other location, but it's the same format, the EVM layer. And that's it. It's not the same database or location. Okay, last two. Since the DUSD problem, DeFiChain has lost its use case. I think DeFiChain has failed and needs a 100% backed system. Liquidity.org on Ethereum has created a very stable USD. We should fork this one. I would skip this because there's no question. And I don't know.
If you think that DeFiChain has lost its use case because of the DUSD problem, good luck on Ethereum on liquidity, because I mean that's the thing. We have still a huge use case. The dToken system is used a lot still, although we have the DUSD problem, and we didn't lose our use case. We reduced temporarily our new use case, but the old use case, the DEX and everything is still there and working perfectly. So
okay, now you are interpreting what is the question.
Yeah, but
what share of the dToken system is already used by real user, for example, holding dTokens without liquidity mining, and not by people who only want to get rewards? I have no evaluation on just holding dTokens.
I think that's a really hard question to answer, even if you have a lot of numbers, because I mean, I know it from myself. I use it to trade. I use it to do bots on it. I use it to hold dTokens. But the dTokens I hold, I also put into liquidity mining because it makes sense. So even if you look at the numbers of the dToken holders who are in liquidity mining, who are just holding them, it's hard to tell who of the ones who are in liquidity mining do it just for the rewards, so delta neutral, or who owns the liquidity pools, or who owns the tokens. So that's hard to tell, but I think there are far more, and really in a lot of big magnitude more dTokens than delta neutral positions in vaults. I think from the vault-maxi we have like 10 or 11 million collateral. So less than that in delta neutral positions. But we have 70 or 40 million dollars in dTokens or something in the pools. So far more people in there who probably bought the dTokens and now use them for liquidity mining, but mainly invested in the dTokens.
I think
that was the first
done
question.
it. Correct?
Yay!
Okay, we need 15 minutes more, but all 50 questions are answered. Long journey. Thanks, Kügi, for helping here out. A very detailed explanation, I think, for the one or other question, and hopefully this helps you out there, understanding more about DeFiChain, how the things work, and was a pleasure to have you here on stage. Thanks for joining.
It was fun. Let's do it again.
I would say let's do it again. How many likes should we shout out we need? Last time it was 1,000, we never reached. Now it's bear market.
So we do 2,000.
2,000. Okay, 500 likes. We will retweet this. We need them for the algorithm on YouTube, and then we do it again. And I think it makes sense, especially when DeFi MetaChain is live. We are more familiar with all the stuff. I think then there will be new questions out, and we can repeat it in a similar way. Thanks for joining live. There were the one or other out. Thanks for watching it later. Like I mentioned before, I hope this helps everyone, and see you soon here on the stage with the next shows. Have a great time. Bye bye.